Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. And what we're going to go into today is oil and gas, do some technical analysis. I think we're close to a potential breakout. We haven't broken out yet, but I'm watching it. And some of the oil companies, I've been reading some, I've been reading a lot of articles on oil of what's coming and how much oil that we're going to have to replace from depletion just to remain flat. And there was an article I was reading, and it was talking about how much we would need to bring online of new production to increase a little bit of the overall world production and to offset the declines. And we were looking, this was written in the beginning of 2021, and they were talking about 2022, the end of it. So it's really a 2-year time frame. With those depletions and with a little bit of an expansion of oil, we need to increase production of new oil by 21 million barrels. With the declines in existing production and with the decline in investments in oil, I'm getting incredibly bullish. There are projections by 2022-ish, 2023-ish that we could be in a deficit of oil of 10 million barrels or 10% of global oil supply. This is with OPEC running flat out, Russia running flat out, everyone running flat out. We could be 10 million barrels short. That is incredible. Absolutely incredible. We've never been in a deficit. To make sure that everyone understands that we've never been in a deficit of oil. If that were to occur, I don't know where prices are going to go. It's going to be massive. It's going to be a big move. And these companies, I don't think, if you look at the chart patterns on a big long-term perspective, they always do a double hump. They do a first hump, they do a second hump, and then they just rip it. We are at the bottom of the second hump, is what I am looking at with a lot of these companies, and we're just starting to come up. I added in a lot, to some of my favorite picks. I added more money into them because I'm thinking that oil, natural gas, especially oil, could have a huge move, and I think it's going to catch a lot of people by surprise, and I think it's going to happen by 2022, 2023, 2024. I mean, there's going to be a big move. I don't know where this thing's going to end up. I'll probably sound completely crazy if I started throwing out numbers. The inflation adjusted highs, looking at the previous bull cycles, were about $300 a barrel. So I think that is definitely possible and could even be on the low side if we encounter this deficit. And as large as the deficit is, we could easily blow past that like it's nothing. So that's my opinion. Take it for what it's worth. And with people being so anti-oil, that I think it's going to add, to the actual price move because we haven't been investing in it. With more renewables, we also are at greater risks of putting natural gas into a shortage as well. So I'm a huge oil and gas bull. I have very big positions. I overweighted this sector along with uranium, and I'm going to get into some of the companies that I own here. So here we go. This is, again, my financial opinion. It's not advice, but here's oil itself. We're looking at this kind of little pullback here. I'm going to throw in a trend line just to kind of show you guys what I'm seeing. We're about there. We hit the trend line just today. We tapped it. I want to see if we can break through here. And if we break through here, I think we're going to see a big move, potentially a big move. I mean, we'll see, but it's looking really good. And natural gas has been moving like no other. It just has these small little day pauses in between, and that's it. It just continues to rip higher. The volume is good. We're in this nice big uptrend, and at some point this will pull back. We'll see wherever that is. But we're coming into a winter season, which is usually a strong time for natural gas. So Man, this thing looks good. Looking at some of the companies, and what gets me pretty confident here is that we're breaking these downtrend lines. And I don't know if we broke this one yet, but I mean, we broke this guy here. And usually what happens is you break these things, and sometimes they kind of pause a little bit, and then they just go. And I loaded in here. I bought some at 4. I bought some more, I think, at somewhere like in here as it was coming up. I think it was maybe this day here, a little bit below $5. So I bought here, I bought here, I bought down here. I bought a whole bunch down here. I think Centennial Development is a decent company. And if oil can break, I think this thing's going to run like a cheetah that you've never seen before. Same with SM Energy. This is another one I own. It broke its downtrend. It's pausing here. We've got a bullish engulfing here. Yeah, man, this thing's going to look good if oil breaks. And we'll see if it breaks. Recaf is another one that's on steroids. You guys have to follow. I mean, you got to get used to the volatility here. It's pulled back. We got this nice little update here. I cost averaged in a little bit. And I bought some here. I bought some here. And I'm watching for this thing to break. We can throw a downtrend line in here. I don't know how valid it is with so little contact points, though. But see how we broke today? To be right about there. And the reason that you draw it there is you go where the closing prices are. So it closed here, 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 closed here. So you want to tap basically the closing points. And we broke out of it today, the downtrend line. And this is where I'm getting pretty bullish. So I'm looking at this stuff. This could be a big move. So I bought more of that. I own Crew Energy. This is another one that's pretty good. It broke its downtrend already. You can see the downtrend looking at it. Let me get this position first. Right through the, oh no, it's right at its downtrend break right there. It's trying to break out of it right now. You might see a huge pop anytime now breaking this trend line if oil breaks. But this is another one that I would consider. Tellurian's another one I own. I bought it back at $1.35.90. I've been holding on to it. Again, I'm not selling. I've seen this before where you come down, you create this V bottom type deal, and then this thing explodes higher. I think we're getting there. It's getting close. This has got the V bottom as well. Be patient, guys. Don't be impatient here. You're going to be rewarded, I think. That other V bottom with Contango, again, I'm just holding on to this stuff. Comstock, this is one that I said, you know what, maybe you should look at it in here. This is one that I might be buying. This was a great spot to buy it on this bullish engulfing day, and then it launched. And it's launching higher. I own it. I'm not doing anything with it, all right? I'm holding on. We broke this big downtrend line, a big pattern. This thing could go far higher and make people a lot of money. So we're early in this game, guys. Tetra Technologies looks good. There's your V bottom there. I think we're probably going to move higher so long that oil goes higher. If we see a weaker dollar and we see oil go higher, I think we're going to see a big move. The characteristics here look fantastic. I'll describe it with what I'm seeing. We have an up move. We have a pullback. We have a bullish engulfing pattern. It came up, slow leak off of sellers, to the bottom of this pattern again, and then we're starting to move higher. This is the same setup as uranium. And this thing's about to break. If we break this little resistance area like 325, 350 and close above it, and oil moves on up, I'm going to be laughing because, I mean, I do own a good stake in Tetra. I got in at 50 cents. I'm just holding on. The valuations here are incredible, everyone. I want to make sure everyone understands how incredible the value is. And the opportunities are so massive. Here's RIG. I own a little bit in RIG as well. Nice little move here. This one doesn't look as good, but it still looks all right. Again, I still own it. But CDEV, SM Energy, Recaf, guys, I'm riding these things hard. I'm going to see what I can do. Crew Energy, Birch Cliff Energy I own, Athabasca Oil, Contango Oil and Gas, I own them, GTE, I'm holding on. If we can, now, eventually this is going to come no matter what, I think. And with the expansionary phase, we're going to get this a big inflationary push behind us as well. So we're going to get a 2 massive fold increase here. We're going to get an inflationary increase from gold going higher, where it's going to raise that ratio. You know, it's going to raise the entire ratio game up, the inflation portion. Then we're going to compress like heck against gold because I think the shortages are out there. Big shortages. We could compress to a very small number that we haven't seen before even. I don't know if that'll happen, but if the deficits materialize that some of these oil companies think that are out there, I can't not own this. Like, I am an incredible, you know what I mean? Incredible bull on oil. And the patterns these things are I'm seeing, and I've seen these things over and over, guys. This is you'll probably look at it and it doesn't make any sense to you, but this V-shaped bottom, I've seen it all over the place. It was at the bottom of 2009 in SM Energy and all these other companies. In that market, it was in the middle of a structural bull market of oil that ran all the way to 2011. That crash happened in the middle of it. And if we can recognize these patterns, this is like ultra cheat mode. Because one, we've identified the market conditions of real estate and what the driver is. Two, we know what the valuations are. So we know where the psychological bottom and top is for human beings against gold, which is an inflation-adjusted price, basically, and what other people in the market look at, like myself. And three, if we can identify patterns, which is herd mentality. If you can see what the herd is doing and see these patterns, and if you look at the cough, that exhibits the same herd mentality pattern. It's got 2 humps and then a blow up, and then it pulls back, and then we're probably going to go back up again. That has the same herd mentality pattern because it's found in nature. So if we can see the pattern, if we know the valuations of where roughly the top and bottom is, and we know what the driver is, now it's just a matter of time before the money comes into your account. And I'm not a buyer and seller. I'm not trading these things. I'm buying in when the valuations are cheap, and I'll sell them in the future when the valuations get expensive and when the market conditions change. But I'm a huge, incredible on uranium and also on oil and natural gas. And coal is looking very good. The chart pattern in coal looks incredibly good. And if you guys have coal, you might see a short-term pullback in coal, but on the long term, it might be pretty good because they're putting in all these renewables. They have no way of really storing the energy. So the problem that they're going to run into is that if that isn't working and they can't store it, they're going to have to run natural gas or coal or something else in the short term, medium term. And it's going to put a lot of pressure because I don't think they've calculated out. And I've asked questions about this with a lot of utility companies and people who work at utilities. They say, how much wind do you put in? If you need 1 gigawatt of power and you put in a natural gas of 1 gigawatt, you have it. What do you need to put in for solar or wind for 1 gigawatt of steady output? Do you need to put in 3 times that, 4 times that, 100 times that? I don't know. Because what if the wind isn't blowing and what if the sun isn't out? Then you have to put a whole bunch more to capture a lot less. So I don't know. It's difficult, and that's why we're getting into these situations where natural gas is going to be a huge opportunity, especially if you get a cold winter as well, or a hot summer now because they're running it for electricity. Or you run into problems where people are dumping money into renewables thinking that this is the best thing to go. They run into mineral shortages or mineral problems or supply chain problems. They can't build it. Well, we haven't been investing in oil or these other fossil fuels, so the transition could be ultra messy with massive price spikes all over the place. So that's how this channel is positioned. You go into the undervalued commodities. You've got all these risks for putting in renewables, which could benefit those sectors. And I see it as a kind of a win-win because you're buying it when it's cheap. So if you guys like that that type of content, subscribe to the channel. Give me a thumbs up for this content if you like it. And thanks for listening. This is Finding Value.